Hey friends, we are going to invest $10,000 and you are going to decide where are we going to invest it.
What is your end goal for this 10,000?
You do not want to grow your money at 10% a year. That is pathetic.
But it's different when you're the one pressing the button.
Dollar cost average is king. Just click and don't think too much.
Opinion on diversification.
What rhymes with D? Diversification. What if one day the government ban all Bitcoin? I have the perfect answer for you.
5K in Bitcoin, 5K in Tesla tomorrow.
Tomorrow? It's too late. Today. I eat losses for a living anyway.
Wow.
If you don't invest, you are going to have a big problem in life. Massive problem.
But I'll say prepare to win everything. And imagine if your money lose an entire of its value. There's a chance. Hi everybody, welcome to Cafe Money, and in this episode, we're going to talk about how should you start investing if you have $10,000. And with us today, obviously, we have Ken, who is someone who is very prolific in the stock market scene. And of course, our host, Juno, and me, Benny here. And in this whole series of podcasts, we're going to talk about money topics with stocks, property, business, and many more as well. And we want to really start this right by talking about investment. You see, throughout last year, crisis happened, people invest in, is it too high to buy? And there's so many questions about starting something, right? So we say, hey, let's talk about starting a portfolio, right? For those people who are watching right now, you're on the side fence, this is an episode that you should not miss, right? So with $10,000, right? And all of us are invested in the market as well. So let's talk about this. How should someone start buying stocks when they have $10,000? And none other than Ken will take the lead and start.
Hi everybody. So I will come with the mindset of with $10,000, I could easily make it back. Because with $10,000, you do not want to grow your money at 10% a year. That is pathetic, right? How much you grow for the next 10 years, where's your money will be at? Not much, right? It's not a life-changing money. So I'll come with the mindset of I'll take the maximum amount of rewards available with the minimum amount of risk. So I'll calculate which investments I could put my money in, which gives me like a 10x, 20x return with the least possible risk. That will be probably how I invest my $10,000.
I think what you share is spot on. If you have $10,000 and you know that your retirement sum needed is $1 million to $2 million, and you know it takes like 20x, 200x to get there, right?
Yeah, man.
So in that perspective, you have to be very logical about what's your end goal, right? If you do not have a logical perspective end goal, you start throwing out money in S&P 500. It's not wrong, but to say that fund is allowing you to retire, right, is quite dramatic. I mean, like to say, oh man, I'm going to invest all in S&P 500 and expect it to really grow up to the moon, right? I don't think it's something that will likely happen.
I don't think you go up to the moon. Probably you'll just go to the next traffic light. Up the hill.
Next stop, right? So I think that's it, right? So topic number one, first thinking number one is that what is your end goal for this 10,000, right? I mean, if you're all in it to buy ETF and buy S&P 500, it's not wrong, just that you cannot see this as a retirement fund. And then again, right, when you look at $10,000, you must look at your overall portfolio. That means, do you have a position in property? Do you have a career that is enough for you to retire, right? To enough for you to keep investing $10,000 every year in, right? Then from there, deciding how aggressive do you need it to be for returns, right? By aggressive, it doesn't mean exact risk exposure as well, right? It's about understanding what are you after. Yes?
Yes.
Juno, what's your perspective as someone who is new to the whole stock investment world and just started to be invested in, right? So how do you see someone having a $10,000 and from a new perspective, right? How do you see this?
Okay, so firstly, if I am investing my first $10,000, okay, for now, I will definitely buy majority Tesla stocks. Because of my mentor, who is Chicken Genius. But he doesn't know he's my mentor just because I watch his channel a lot. So, but of course, it's because after learning, then Tesla is fundamentally strong. Okay, so, but honestly, for someone who is starting out, I think for $10,000, you can't really expect it to grow and become your retirement fund, I feel. But I think it's a good sum of money that allows me to try and investing in maybe different things. even if you go into the market, right, there's just so many different types of investment instrument you can go into. So I think for 10K, I would probably use it to try and test out in different kinds of instruments and then learn from there. I think that's how I will utilize it.
I would say, right, there's a lot of fundamental lesson that is verbally and theoretically simple, like dollar cost averaging. But when you see the stock market keep going up, it's very tough emotionally, right? If you're new to the game, right, to dollar cost average, right?
To add on to that, because there are just so much resources out there, so many videos out there for you to learn about investment and all. But it's different when you're the one pressing the button.
Yeah, I mean, imagine you press the button at, let's say, $500, and 2 months down the road, the stock goes to 600. It sounds easy to click, but I tell you, it's going to be one of the hardest things to click. Even I have that problem. I mean, if a 10 years investment, 20 years, it's still hard to click. So that's why I always tell my audience, dollar cost average is king. Just click and don't think too much.
Like I remember invested a heavy position on 1st of September, blindly assuming that battery day, right, is gonna be it's gonna make the market go nuts, right?
Yeah.
So I remember it was a 475. So I click it, I woke up, it's 425. It was 425, right? I was like, oh my god, it's like a day difference here, or 2 days or something, and I just lose so much money, right, over a short period, right? But it takes a lot of courage then again to really go in at 425. So you secure at 450. You get it? I mean, like, so very short perspective, dollar cost average. It could be a very long perspective of like your monthly contribution. But the fact is that you can never felt that emotional right if you are not in the market. Only when you're in, if you truly think that you're a long-term investor, can you think through that emotion, right? I think with those mini sagas of your initial investment, it'll give you that, not confidence, but stability in what you're supposed to do and not emotionally jumping in and out. To today, right, I still see friends who are in stocks new, but jumping in and out on a weekly basis. And I'm not talking about making money jumping out. I'm talking about slightly losing, trying to secure the position, jump out, and someone says something, they just keep bouncing in and out. I think that's very unhealthy in the long run. And we all know statistically, right, time in market is more important than timing the market. Yeah, so you got to understand time in market is key, right? So time in market, Ken, I got $10,000, right? So do I put 10? Do I put 5? Do I put 3? Do I put 7 first? How are you going to do it? Today, I imagine you have nothing. You have your knowledge, that's all. You have wiped out with your account.
Yeah.
You have $10,000. What will you do?
Throw today everything, $10,000, Tesla. I mean, okay, so now we are looking at, okay, maybe I will not do Tesla now. Okay, for a very specific reason. If your goal is to massively grow your money, you see, Tesla, the risk has dropped drastically, and because the risk has dropped drastically, the rewards has dropped a little bit less. So it's just $10,000. Come on, we can make the money back. So probably I'll go like max Bitcoin. Like I'll go. I mean, if your whole goal is to grow your money a lot, but if you want to go on a safer bet, probably I'll still go Tesla. So maybe 50% Bitcoin, 50% Tesla. I mean, that would be on a safer bet.
And on this note, it can get safe until it becomes stupid, right? I mean, like, if you want to be safe, you split out into like 20 different stocks, 35 different stocks, right? And to be honest, that can be risky in a certain perspective, because if you're talking about like spreading it 35, some make, some don't make, eventually you make nothing, and then when stock market just crash, you almost lose everything. It takes 3 years to recover. Then it's actually not that safe if you're totally diversified. So just want to hear and really on a new perspective and someone who is in the market for long, right? Diversification. Been through that journey. What is your opinion on diversification?
What rhymes with D? Diversification.
Donkey.
All right, diversification is for donkeys.
Donkey, donkey.
I think diversification is purely for people who are just more ignorant for the stock market. I think that came from Warren Buffett. I mean, Warren Buffett, he had his good days where he was concentrated portfolio. Yeah. I mean, now you can't ask him to concentrate because he will just buy out the entire company. So he's at a place where I think he has no choice to diversify because he has so much money. So I mean, at our level, we should be concentrating our portfolio. Because when you invest, again, your ultimate goal is not to to work. I mean, just to have financial freedom and money not so much on at the back of your head. So if that is the goal, you really need to push.
I think concentration is key, especially your pot is small, right? And if you try to get fancy with $1,000, it's even worse, right? Because the truth is, you wouldn't have the time, the attention, and the bandwidth to even understand 5 companies.
Yes.
That's my prediction. If you have a day job, if you have like a spouse to handle, right? I mean, like you just have so many things that you're crying kids, right? How are you going to be so focused, right? So to say that you're just purely diversifying to be safe could be one of the most riskiest thing to do. And that I have to agree, Ken Teng. Do you know?
Well, I got experience to share. Benny is right by saying that I'm actually a new investor because I only started seriously in stock about just last year when it crashed. But previously, I actually did try before, about 8 to 10 years ago. Okay, this one I had about 40K. I lost about 20 plus. And then I just stopped.
So what do you do?
Because I didn't really have the time to pay attention to what's going on with the companies that I'm putting myself into. It's a lot of hearsay. It's a lot of just following people who I thought, basically follow other people to trade lah. That's like the worst thing you can do, right? So then once that happened, I lost all the money. Then I decided, okay, this is not for me unless I have the time to really look deep into the companies that I am investing into. If not, then no. So I stopped for many years. Then of course recently I picked it up again. But once I put my first dollar into, which is Tesla, after watching Chicken Genius, Tesla, then every day at least I will spend time to look into what's going on with the company. So it's not just money; it's also time.
I think it's easier to gain momentum to understand something in depth if it's only a few companies, right? Because you learn a little bit here and there, and because you only have so few companies to focus on, to gain a better comprehensive view on it, right? It's much easier, right? And of course, if you are like 10 companies in, market screws you up, you don't even know how to respond. Do I sell 5? Do I keep 5? Do I sell all? Do I sell 3? It just get confusing. So I think chances are you end up doing the most prolific move, which is like either hold or sell, because it's just too confusing to move on to balance your portfolio to begin with, right?
Yes.
So I think second point is, number one, we talk about understanding the goal of your portfolio. Number two, right, really do consider diversification. Like concentration might be one of a better strategy going forward as well. There's nothing wrong buying all kinds of shares, but know your game is key.
I do know when you concentrate, you got to really understand the company you're buying. You just don't buy because somebody else bought. You need to understand the fundamentals. You must understand if the company you're buying, what is its growth projection? Do you understand the CEO? Do you understand the CEO's? Could he execute on his plan? Or you do not want the next like Theranos? Or you do not want some or the Luckin coffee and stuff. You do not want that. So you need to really understand the business itself. And there is no other way other than doing your own research over and over again, and just understanding this whole scene.
Yeah. I mean, even in Bitcoin, like many people are buying it for the trade. They don't understand blockchain, which is fine. But my point is, if you do not understand the power of the function of that tool or that stocks or that company, right, then you'll be like, what happening in the previous saga? Remember the previous saga where everybody was in? It was at 30,000. It was the tulip saga. They all went up, right?
Yeah.
But people don't understand why they are doing, why they are buying. They are following someone else to buy. So when it drops, they will not have that confidence to hold. Exactly. So the question is like, if you are going to go into Bitcoin today, as of what we speak right now, is at $50,000+. Like it's $50,000+, guys,
56.
Right? Yeah, it's
to the moon.
Right? Yeah. And what happens tomorrow if it falls back to 30K? What will you do? You're gonna hold it out. You're gonna buy. You get the point? Yeah, and that comes from a fundamental confidence in what you're doing. If not, someone else says sell, someone else say buy, and you're just following around. And the sad truth is, many sayers are not even doers. They're just commentators by the side, right? Like you say, but hey, you know what? If stock market drops 30%, I'll jump in. So it happened last year. 80% of the world didn't jump in, right? So your stock market is too high, you shouldn't buy. They're not in yet. In the next crash, they will say, I told you so, but they're not in it. And for their whole life, they might never even be in, right? But yet you are receiving their advice. That's pretty scary, right?
Yes.
From a non-practitioner.
I have one more point also. I mean, this is for everybody if who wants to do concentration. This is one thing you could do for yourself, and it's personally something that I would do for myself. It's like, let's say, for example, I'm buying the Bitcoin or Tesla. I'll get somebody who absolutely hate the counter or whatever you're invested in and question you. If you're able to answer every of the person's question with high certainty, you know the technical stuff, then the investment is good for you. The biggest problem is that you buy into something and you just realize somebody asks you, what if, like, let's say, for example, you want to ask me questions on Bitcoin, like what if one day the government ban all Bitcoin? I have the perfect answer for you. I know how to answer you because I have asked the questions myself. So if you know how to answer these questions, you are probably ready to invest in that particular stock or counter crypto. Yeah.
I'm curious here. How much time do you spend researching on the investments that you're in?
The initial hard work is a lot. But subsequently, it's just all about reinforcement and just clarifying your own doubts. For me, I have a little bit of advantage because I have a YouTube channel. So whatever I put out, I will get donkey comments coming in, and I appreciate donkey comments because they keep me on the edge. Like, I'm always like asking, what if I'm wrong?
Yeah.
So I'm usually reading those comments, and once I see, I mean, alright, if you say that, if your comment is Bitcoin is going to go zero, I'm like, like middle finger you. But if you are really objective on it, like you ask me, what if quantum computing one day is going to disrupt Bitcoin because it's like 1,000 times more powerful? Then perfect. I would like the answer. I like that question. I'll go and research on it. So if you're talking about I have the advantage because a lot of people ask me questions. So I mean, for you guys, you can actually get somebody, anybody or your own, you can ask yourself the same questions, like what if this, what if that? If you're able to answer it, hey man, it's about time for you to invest.
I would say that, in a more executioner standpoint, right, is that even if you've got no clue and you're following, I'll say this, see if you guys disagree with me, even if you've got no clue and you're following, right, I still think you should start, but very small amount. Why? Because there is still that barrier entry of creating that account, getting to know what to do with it, how to click the buy button, and what to do. And the truth is, when the market struck last year, when the stock market dropped by 30%, right, you can be theoretically ready, but if your account is not even up, right?
Yeah.
I mean, it's going to take forever, right? And the admin is going to bore you down, and then like you might get sick of it because price got and many things else. So at least get yourself into a ready position by at least having money inside there, just a little bit of dollars here and there. Not maybe if it's not even big, but at least have an account, right? I bet half the world don't even have a account in any platform, right, to begin with.
Yeah, when March hit, a lot of people wanted to invest, but they took months for them to open a brokerage account. So by the time it's,
V-shape. It was V-shape, right?
Yeah, it was absolute V-shape.
Yeah.
No.
V-shape as in it recovers like really fast and
Yep.
boom, it's over, right? So that's the danger that I see, right? So let's talk about allocation, right? You say that 50% into Bitcoin, into Tesla. Just as a guys, just a disclaimer, these are our opinions and our comments and it's a hypothetical example where we have only a 10K lot, right? And that's how we see the market right now. But will you be like 5K in Bitcoin, 5K in Tesla tomorrow, or are you gonna cost average your way in? How are you gonna like buy in?
Tomorrow? It's too late. Today.
So you're not even gonna put like 50% in and wait for like another week to put 50. Like you won't even have an allocation strategy.
Knowing the kind of knowledge I have now, I don't care.
Yeah.
I'll just put in. I mean, so what if I may not be right for 1 day, 2 days, or 1 week? I'm not. I know I'm going to be right 5 years down the road. So I really don't care.
You took on a more long-term perspective when you look at this.
Because most people they think of optimizing and stuff. I'm kind of done with that. Yeah, and you realize you just because some people they hold money to an extent that is so precious to you. Okay, I always like to talk about money this way. Think of money as a partner. If you are forever like sticky to the partner, I'm not saying it's wrong, but yeah, sticky every moment, that kind of stuff, guy or girl. I mean, even they are going after a girl, or you are that, you kind of like turn
them off.
Yeah, so money, don't do that to money. Just treat it with respect. Just put it at a place where it's good investment and just chill.
There you are.
Trust
One
the
of the criteria to date Ken is not to be sticky, guys.
Trust the process.
Trust the process. trust the process.
Yeah.
Okay, so on that note, let's go back again. So I would see it a little bit differently because I've been new more recently, not as new like last year, but I'm new. But I would have take a bite-sized approach to go in. I'll buy in, say, every 2 weeks or every month once, not just because of price, but because of gearing up my confidence. Because I want to think of someone that's very new. I mean, they go bum bum, it's like, oh my god, that emotion might not be able to take it. So I might take it like slightly slower by saying that, you know what, 3 tranches. Right, maybe not even price target tranches, but just let me understand that I can take the high, I can take the low, you know what I mean? Just that mini high, mini low. You know how when you look at an account, right, you can put it to one day, it can look like right? So I think just for people to understand, hey, you could have click 1 month, you can click 3 months, it's pretty okay. You know what I mean? Like just for that, I would say for absolutely new beginner, like you might have your price set on 50-50. I would say maybe go in a tranches, not price targeting way.
I do agree. If you have a beginner mindset, you are not ready to see a minus $10 in a day in your account. Then probably you
I lose $300 a day.
I lose $300,000 a day.
Right?
I eat losses for a living. Anyway.
Wow. If you guys want to buy the Can Tank I Eat Losses for a Living t-shirt, right? Click on the link, subscribe, and comment in this video. Okay?
But the problem is there's no t-shirt for you to buy.
Not now.
We'll license it from you.
License it from Ken, right? But anyway, so Juno, how do you feel from these 2 different advices? Like, you coming in. How do you feel like? How will you allocate, or are you just being in the market when it was totally optimism last year? Because if you enter after the crash, no matter what you buy, you make truckloads of money, right?
Yeah, man, you can be a donkey, you still earn a lot of money.
Yes.
So what's your thoughts?
The context, if it's new, really new, actually, it's a good. If we rewind back to last year during around March, exactly, I think I invested about the same exact sum of money. So still new. So I went in looking at funds, just because it's diversified wage, of course. Then but because of that, as I started out, I actually did I look at the few different companies and funds, and then I spread the money across. But of course, it's lucky that because it's a V-shaped dip, so earn money. Okay, but I think that's why what I got out of it is to really get to be in the market and experience the thing moving, and then get used to it. Then after that, I then learn how to concentrate, and then now about 90% of my portfolio is in Tesla. So
He's gonna make this channel very like pro Tesla, every 5 sentences we're like 90% in Tesla, 50% in Tesla.
Of course, I'm here.
I love Tesla, and I think that is one way to invest. It's our way, but I think the topic is about how to get started. No matter what, just get started in the market. I think is key. Awesome. So on that note, right? So now someone have a 10K. They have a goal, they have an objective, they want to be concentrated, and they want to do some allocation. You don't believe in, which I agree, but do some little bit of allocation. And what else should a beginner consider, or should they go through and start preparing themselves? Because it's their first 10K in the market. Don't forget. Juno, remember way back, it's your first. It's not like your next 10K, which is very different, right? Your first 10K. So what else do you think they should consider, or what advice do you have for them?
Probably Juno, you start first, because I still need to think like I need.
Yeah, especially you're like so far in, right? You need to go so far.
Rewind all the way back.
Okay, Juno. So on your perspective, what did you consider when you got started, right? And how did you really went in?
Yes. So if you're talking about last year March, right? It's like the it's still new. So I think one thing I prep myself psychologically is that I am prepared to lose this 10K. That's what I told myself not to lose it, but to actually help to put things in perspective, I guess, in terms of like if you want to invest, then firstly you got to take the risk, and secondly, if you actually take the risk and be accountable for it, then it will set your actions straight and all the time that you want to put in to really spend the time to examine all the companies that you're investing in, or you put the time in. If you don't actually take ownership of this, you put there, you lose it, you may feel sad for a couple of months, but then after that you don't get anything out of it actually.
So how about you, man?
I don't know, man. When I hear things like preparing to lose everything, it reminds me of like when I was investing in some scam products before. You know, it's like prepare to lose everything, right? Which eventually I did lose everything. You know, so I think on that mindset of okay to lose everything, but I'll say prepare to win everything, because a dividends of like 10K would be like 5%. That's like what? How much is that? I feel maths like what?
$500.
What is this like?
50
$50. Like
50?
I don't know, 55. I don't know. It's just Mr. Insignificant amount, right? So I can't make a living out of it. So I rather go in to prepare to make everything, and my stand will be volatile, will be aggressive, will be winning big position, because then it makes sense for me to be in the stocks market, right? So how I see it, right, with 10K is that I want to make sure my career is fixed. I want to make sure that my property investment is fixed. So whichever money I make from this, it better get me to the moon. It better get me to the moon. Because we got 10K, right? So if we ever get to 10x at 100K, well, then the amount makes some sense, right? 100K. If we ever get to 1 million, well, that makes a lot of sense if I'm going to put in 10K every year in, right? So I would then now take a slightly different position of not just preparing to lose everything, but do all kinds of research I have to have that conviction to be prepared to win everything, right? Which is like what you guys have been mentioning, and us have been saying as well, taking very concentrated position, getting very clear about what we're doing, and going hard. Yeah. And you?
If I were to do like 10K again, same thing, like Tesla or Bitcoin. The reason why is this: you need to understand that if you don't invest, you are going to have a big problem in life, massive problem, where asset prices will just keep. I mean, it's really going to happen. Like asset prices keep going up, stock price go up, housing price, your basic needs will keep going up, and you're still earning the same amount of money. So it's a do or die situation. So it's either you're not going to spend 10K to invest in a dividend company. That is not your life changer. That's going to do nothing to you. So that's just going to only like secure your money. You must well put it in the bank and do nothing.
Speaking of which, of do or die situation, and I think that right now than ever, we need to step up as a channel, as influencer in the market, to really speak about this do or die, because I don't think the majority of the audience and the population out there sees this as a do or die situation. They think that investment is an optional choice.
Yes.
It's an optional choice. Right? And it's very scary to have the position, because we are in a period of wealth transfer. If some of us have our portfolio grow like 5, 10.5%, 100x, right? Then guess where will the other money goes to? It goes to inflation. That means someone else is paying for that price of someone else's growth, right?
Yes.
And when money just keep printing, hyperinflation might not be speculative, but inflation is definitely there, right? In recession, right? That means that if your money stays the same, it's losing at a exponential trajectory, right? And that is dangerous. And imagine if your money lose an entire of its value, there's a chance. Because it's not money, it's just currency. It's not real money, it's currency. Right? If you lose its entire value, if you don't even have a single position in Bitcoin, you are not part of the structural shift, you will be left behind.
Yeah, you like I say, like you can don't choose to believe in Bitcoin. You don't believe in it, but at least when you see smart money going in, just have a little bit. Don't just ignore what's happening around you, because sooner or later change is really fast. Like I always have a lot of Tesla reference because the amount of research I do. Like last time when people were using horses versus automotive, when those early days, people never thought that that they will actually drive a car. Because they were like, you mean I need to build roads to put my car on? People just couldn't get the idea. But now if you were to take a horse, it's probably for fun. And so a shift comes very fast. And the transition from horses to cars took like 3 years. Yeah, and that was really, really fast. So that
was using technology then. And it's already so fast, it's 3 years.
Yes, and I think more than ever, this COVID has pushed. I mean, 10 years ago, if you ask me, could I invest, or I don't need to invest 10 years ago, I would probably like, okay, I'll be okay.
Maybe,
but
it's nice.
But this whole COVID thing, if things are going to go really haywire, if government printing goes to the moon, I mean, it's really to the moon. I think government printing will go to Mars, man.
It's a really unlimited qualitative easing. Like it's just like is in an infinite printing money state really right now. Yeah.
Yes, and probably the best thing you can do to yourself now is, I mean, other than Tesla stock, which is owning a very good fundamental business, which is going to transit the world to sustainable energy, next thing you want is to actually own an asset without counterparty risk. So what I mean by counterparty risk is that, let's say you have a stock with a brokerage. The brokerage goes down, goodbye. You know, you put your money cash in the bank goes, goodbye. So the only asset in the world without counterparty risk is actually Bitcoin, cryptocurrency. You don't talk to me about gold. The reason why I don't think gold is counterparty risk because it's illegal for you to take gold on board a plane and go to another country. So that doesn't, and I don't think you got a whole gold bars in your house. That just doesn't make absolute sense.
Honestly,
so, yeah.
I have some silver bars in my house.
I heard Robert Kiyosaki just bought a lot of silver, man.
Yeah, I mean the whole speculation is that if stocks drop, inverse relation with silver and gold. But honestly, even someone in my position, that was like 8 years ago, my silver bar have definitely risen in price. But my point is, it is still too slow of a commodity of growth if you compare it with like Bitcoin. Yes, it might be one form, but I mean, think about it. Is it really environmental to support silver bar as well? If the price shoot up, what happens? Everybody digs the ground, right?
Yeah.
I mean, the earth get killed. I mean, straight up on that, right? But let's talk about 10K perspective again, right? So we are back here at 10K. And I think this channel, right, is designed to really talk about money, not just in stocks. We're going to talk about making money in many forms as well, in business, in property and all, because I just think that the amount of education out there to talk about wealth, it's low or it's confusing. Yeah.
Or talk by donkeys.
Yeah. Practitionership is very important in this key, right?
I guess you need to listen. I mean, you don't need just to listen only to us, but listen to the people who are really doing it, are practicing what they say is what they do.
Yeah.
I think that's probably more important than anything else.
What they say is what they do. And on this note, on US $10,000 on this note, guys.
What is this?
Guess what is inside this box?
$10,000.
10,000 US dollars in change. Obviously, this is not 10,000 USD. But we didn't have time to do this, but we make a decision, right? We make a decision because we want to launch this channel and really want to have growth with you guys. And stock investment is not just about money. Allocation is also about emotional journey, right? So what we're going to do is this, not this fake money. We're going to put $10,000 of our own money, right? And we will let you decide how we should invest.
Guys, you decide how we invest the 10,000. So don't screw us over.
Yes, our real money, not a demo account.
Yes, it's not paper trading.
And
it's
then
real
every
money.
month, every month we're gonna review, right, what trades we're gonna make based on the comments that you put in, the poll that we're gonna pull out on those decisions. We're gonna combine them into a strategy, and we're gonna put our money in to the stock market, right? And every month we'll review the result, and we'll talk about the negativity, the positivity, the mistakes that it happens, right? Don't screw us over. This money, we want to take it to the moon, guys. Don't screw us over, right? And this is going to be the part where you got to be involved and be part of this community, this growth. And if this money will shoot up in terms of profit, our goal here is to donate this money to charity as much as we can. And as a community, we learn, we grow, and obviously to profit up in this journey. And for someone who is new, don't say that we're not part of this journey. We are now with you in this journey, right, to grow together as well. So what we're going to do is this, is that the context is as such, right? So we're going to start by allocating our first $5,000 into whichever decision you guys are going to make. So what I want you to do is to comment on this channel and this video, right, on how would you invest the first $5,000, right? And then after that, we're going to throw out a poll. Please subscribe and participate in the poll so that from the poll result, plus the comment sentiment, we will piece together a strategy. Whether we love it or hate it, we will still act on it, right? Then we're going to see the result. We're going to track it. And hopefully 1 year later, we do not regret this decision of taking our own money, right, to do this as well, right? I hope you guys love it as well. Any comments about this 10,000? Juno, Ken?
very exciting. We are putting our money where our mouth is and where your fingers are. So please don't screw us over.
Ken, what do you think? Where do you think this will go?
I think this is really exciting. The reason why is that because we are doing this with you. So you can actually, let's say if you make a wrong decision, you understand why is it wrong, and we get the pain out of it and you get the pleasure.
We will pay for the learning.
Yeah, but because we pay for the learning, we all can we will benefit you, and we will all learn together as a community, and let's see what's the best way to grow our money. And let's say if you put investment together with us and we grow together, it's alright. We learn together and we get rich together.
How I foresee is in a matter of months or year time, right? As a community, in the comment and the poll session, we will start making smarter and smarter choice as we will be growing this pod. And together, right, we hope this acts as a confidence for you to know that you're not alone. Many people have just started in their investment journey. It doesn't take a crash to start. It doesn't take a boom to start. It just takes you to commit to starting something. While we discuss other topics apart from stocks, don't get me wrong, guys, we'll still be discussing about business, about marketing, about every income opportunity out there, even Bitcoins and property, right? Do note that this will be the start of the channel. I hope you guys like it. And remember, if you like it, subscribe, join us in this movement, right? So that's it for episode 1. If you learned something, comment once again. Let us know what should we do with the first $5,000 for our allocation, and we will see you in the next video.